Well, it's another steady quarter for India's largest lender, SBI. NII and margins meet estimates with healthy improvement in asset quality. The bank also crosses 100 lakh crores. In business for the first time, management says that the industry credit growth may remain at 11 to 12%, but has revised its credit growth higher. 18 hours Ankur Mishra had an exclusive conversation with Chairman CS Setty. Let's listen into that exclusive conversation with Mr. Setty.
If banking was an IPL, State Bank of India has just hit a century. Yes, I'm talking about the business which has crossed 100 trillion. And if you talk about Q2 numbers, net profit over 20,000 crore, margins a beat of over 3% if I talk about domestic NIMs. Overall, the captain of the ship is here, Mr. Setty. I want to understand from you first, now that these milestones are crossed, and I talk to you every time on this, what next we can expect in the second half from State Bank of India?
Thank you, Ankur. I think these milestones are milestones, of course. There are next milestones to move on to. But broadly, our guidance is that we would like to maintain NIM above 3 through the cycle and ROA of 1% through the cycle. And we have revised our credit growth guidance based on the prevailing credit environment. We believe that 11 to 12% guidance what we have given, we are moving to 12 to 14% guidance, and we are able to contain our credit costs, maintaining the asset quality of this nature at that scale. I think is, in our view, we have done fair job in terms of growth as well as in terms of the asset quality, and the trend is likely to continue for next 2 quarters too.
When you say about credit growth of 12 to 14%, one part of the results where you see the corporate credit, it is still in the single digit. Do you see that in the second half that pickup can be there?
Yes, I think for the first time after so many quarters, barring March quarter generally, which gets a lot of growth, we were able to reverse that negative trend in the corporate credit, and almost with a very large corporate book, we were able to grow as much as the industry had grown. That number one. Number two, with almost 7 lakh crore pipeline what we have, we have confidence that we should be able to have a double-digit corporate credit growth in the next 2 quarters.
When you say double-digit corporate credit growth, what should one expect on the retail front? Because if you talk about currently, that is growing more than 15%. If I talk about some of the pockets, you mentioned about the auto loans as well, that has seen recovery. Where do you see that kind of growth happening in the second half?
Most of these sectors, I think, will continue, at least for Q3. Q4, we need to see. Q3 generally is a strong quarter for everyone. And Q4, as the year ends, a lot of sales happen and credit growth happens. If Q3, our view is that as far as what we are seeing now, most of these growth rates what we witnessed in Q2 are possible in these segments in Q3 too.
Talking about net interest margins, you had guided earlier that U type of recovery will be there on the margins. Now it has come 1 quarter early, if I remember correctly. So do you think that by the end of the year that 3% plus run rate will be possible and we can even improve from here?
We are still sticking to the guidance that exit NIM would be above 3%. I think, yes, you're right. I said that from Q3 onwards there will be an upward trend. What we have done in Q2 is a balanced approach towards wholesale deposits, which had helped us to bring down the cost of resources significantly. And we also have seen that our current account and savings account balances, daily average balance, not only the quarter end growth rates, have been robust. This has helped us to contain the costs on the deposit side. And this gives our confidence, and also the full benefit of CRR reduction will be available by November end. So it is possible that we will maintain above 3% NIM.
Right. And talking about the net profit numbers that had a weightage of Yes Bank sale which happened in the quarter, I want to understand from that front, without that, how would have the quarter looked like?
See, it doesn't have any impact on the NIM, right? It is basically in the net profit and the ROA. I think the impact definitely aided by the S Bank transaction. The NIM, our guidance on the ROA was above 1%. Even without S Bank transaction, it would still be above 1%.
All right, we'll leave it at that. Thank you so much for joining.
Thank you. Thank you.